Hey everybody, morning. We've got a wonderful day in the neighborhood. Welcome back, everybody. Good morning, my morning monsters. You know, every once in a while a story comes along that just chef's kiss perfect little truffle of political theater, financial absurdity, and if you know where to look, a golden thread of investment opportunity wrapped up in a whole lot of bullshit. And that, my friends, is today's story. We basically have a 5-star Michelin rated delicacy of beautiful, beautiful, absolute political nonsense. Have you heard about these Trump homes yet in the mainstream media? Have you heard about them? This one, you may need a second can of Monster for this. I mean, maybe a second cup of coffee. I mean, it sounds like a new reality show, doesn't it? Like The Apprentice, Real Estate Edition. I mean, I can see it now. You're fired from your apartment. No, go build a house. I mean, no, this is real. Or as real as pretty much anything gets in a midterm election year. See, the story first broke by Bloomberg is that some of the biggest home builders in America, we're talking about giants here, we're talking about Lennar, we're talking about Taylor Morrison, we're talking about D.R. Horton. I mean, they are cooking up a massive program to build 1 million Trump homes. 1 million Trump homes. Trump homes. The goal? We're going to solve this housing affordability crisis. We're going to have every hardworking American a white picket fence, a 2-car garage, and the ability to potentially purchase the American dream and make it affordable. How crazy could this possibly get, right? And how are they possibly going to perform this miracle? With a magical, time-tested, definitely not at all problematic business model called rent to own. Not at all problematic. I mean, Aaron's went out of business for this, right? I mean, come on. Yeah, rent to own. I mean, it's the layaway plan for the biggest purchase of your life. As if a 30-year mortgage isn't already problematic, or they're spitballing 50-year mortgages. I mean, what could possibly go wrong here? What could possibly go wrong? I mean, what could possibly go wrong? So, here's the pitch, the wind up and the pitch. It's actually stupidly simple on the surface. The home builders, these big companies, Lennar, you should know them by now. They build a ton of new entry-level houses. Then, a group of private investors, we'll call them the money, they swoop in, they buy them all up. Buy the whole neighborhood, right? Lennar builds them. These guys buy them up. Beautiful. Then you, the hardworking, aspiring homeowner, get to move into one of these shiny new houses. And if you don't buy it, you rent it. But the magic part, after 3 years of consistently paying your rent on time, a portion of that rent money magically transforms into a down payment. And poof, all of a sudden, you're a homeowner. It's a pathway to ownership. Sounds beautiful, sounds nice, sounds great on paper. Tackles a real problem out there. And we are, according to the latest data, about 4.7 million homes short of having affordability in this country right now. 1 million doesn't make a dent. This is not a gap. This is a chasm of epic proportions. It's why your rent is astronomical if you're renting, and why buying a starter home feels like you're trying to buy a Monet with pocket change, and the thing doesn't even look that that sound compared to just a few years ago. But the politicians love this. Trump gets a signature program with his name on it. He gets to stand on a podium and say, "We're building Trump homes, millions of them. They're beautiful homes, the best homes." You know how he says that. I mean, come on. It's a winning strategy. But, of course, with any story, we've got a twist, right? And this is where it can get a little bit interesting, maybe a lot of it sarcastic. So, my man Trump has also said he wants to ban large institutional investors from buying up the single family homes. But at the same time, he said, and this is a quote from Davos, like last week when he was up there, "I don't want to drive housing prices down. I want to drive housing prices up for people who own homes." That's what he said. Think about this. Think about this for just a minute. Let's get this straight. The plan is to make housing affordable while making houses more expensive for people that own them. What? And it's going to be funded by the very same private investors that he wants to ban from owning houses. Typical political bullshit right here. I mean, it's like saying you're going on a diet, but the diet is sponsored by Krispy Kreme, and your first meal is a dozen glazed donuts. I'm sure that's going to work out great. I mean, it's beautiful. It's perfect political contradiction. And when there's contradiction, usually there's an opportunity for somebody to make a bunch of money. Now, the reason that we're all here, I mean, we want to try to make some money, right? So where's the money flowing? Where's the money opportunities? The first most obvious play was the knee-jerk reaction on Wall Street. The day that the news broke, Homebuilders stocks popped. Lennar, that ticker's LEN, shot up 5%. Taylor Morrison, TMHC, monster. Whew. TMHC jumped 7%. But it's not just them. There's a whole neighborhood. We've got D.R. Horton, KB Homes, Pult Group, Toll Brothers, all of them swimming in the green. And you've got some home builder ETFs like ITB, XHB, Nail. They had a good day. This is the classic buy the rumor type of trade. The market doesn't really care if the plan's a fantasy. It just cares that for a moment in time, everybody believes the fantasy that the government is going to back building 1 million homes. Is this actually a 1 million home construction boom? Is this a fire hose of cash aimed directly at these companies? Doesn't matter. If everybody believes the fantasy, the stocks go up. Simple, easy, high school level, simple stuff, right? Supply, demand. Demand's gonna, money's flowing. Let's get after it. But that's not the savvy trader type of play. That's the surface level play that the mainstream media hypes right there. The real story, the real money, is in the fine print. That rent to own thing I mentioned just a minute ago. So let's talk about the business of rent to own. A few years ago, Business Insider did a deep dive into the biggest player in this space right now, as far as home rent to own goes. It's a company called Homebuilders of America. And what they found should be a giant, flashing, red, neon, glowing warning light so big that we could all see it, like it's sitting on the sun. Over a decade ago, Home Partners saw about 4,000 of their tenants actually succeed in buying the home. Success, American dream, locked in. But during that same period, 15,000 of their tenants moved out without being able to buy anything. That's basically 4 failures for every one person able to succeed. That's a 80% failure rate. Moody's report, trying to put a positive spin on all of this, called it a 38% success rate for newer tenants. That's an improvement. An improvement. That's a 62% failure rate, though. If you had a 62% failure rate on, if you went to, let's say you went to the hospital to get an appendix out or something like that, and the surgeon's like, "Yeah, I have a 38% success rate on this." You'd be like, wait a minute. That's a 62% chance that I need to find a new surgeon. I mean, why do they fail? Because the model is often stacked against them. Tenants report paying above market rent for these rent-to-owns. They're responsible for maintenance, just like a homeowner. But you're paying more rent, but you're also responsible for all the maintenance on the place. I mean, and you get none of the equity unless you make your payments on time, and you do it consecutively for years. And if you're late on a single payment, guess what? You lose it all. Eviction starts swiftly. And who gets rich here? It's not the tenant. It's the landlord, the private investors. I mean, it's all a setup, right? And who are these investors? Well, Home Partners of America was backed by Wall Street royalty. People you might know and love. KKR. I know Goose from, definitely aware of KKR. BlackRock. And in 2021, it was bought outright by Blackstone for $6 billion. And they're not in the business of creating homeowners. They are in the business of collecting rent. And the rent-to-own model is a genius way to put a great sign on it, put a great label, a great, facade on the whole thing. You get a tenant who's emotionally invested in this property. They want to take better care of it. You get them to pay rent. You get them to pay for their own repairs. You get to charge them a premium for rent for the option to potentially buy it out if they can consistently make those payments for years. Who doesn't have a hiccup every now and then? And you know that statistically most people, 68%, maybe 80%, they're never going to be able to execute the option to buy. I mean, they'll just be a low-hassle, high-paying tenant for a few years, get jammed up in their life, and then you get to evict them. It's a rental business disguised as a pathway to ownership. I mean, it's brilliant, and it's absolutely brutal. So if you want to invest in the Trump Homes narrative, you have two choices here. The feel-good play, you can buy the home builders. I mean, they're probably going to make the money here. Lennar, D.R. Horton, just grab up the whole sector with the ITB ETF. Even if a fraction of this plan actually happens, they're probably going to have some massive contracts. They're going to build tons of houses. Their revenues go up. I mean, it's clean, direct, logical. It's a way to make some money. The vulture play here, you follow the real money. You look at who's actually going to own these million homes. It's not the builders. It's not the homeowners. It's not the potential rent-to-own homeowners. It's the investors. It's the companies like Blackstone that are a bit too big and diversified to be a pure play. But if you have some giants in the single-family rental space like Pritium Partners, their co-president was already on Bloomberg talking about how to make this all work. They're one of the largest owners of single-family rental homes in the country. And they're the ones who are going to be these landlords. I mean, it's an absolute cynical type of play, but the potential to be profitable here in the long term is pretty it's pretty locked in if this actually works. You're not betting on the construction boom. You're betting on the 60+% failure rate, maybe 80% failure rate of people not being able to follow through and actually buy these homes. You're betting on a nation of permanent renters, paying premium for a dream that for most is never going to come true. So there you have it. It's Trump Homes is a political slogan, a stock market rally, and a business model that would make a loan shark blush. I mean, it's a perfect microcosm of the modern economy, a feel good on the surface type of story, and a cold hard cash extraction machine under the surface. It's brutal. And will any of these homes actually get built? Well, probably. They're probably going to be pushing them out. But the real question isn't whether they're going to be built. It's who are they being built for? Who's going to be trying to rent to own? The family's dreaming of a front yard and a white picket fence, or are they going to be built for the shareholders of the companies that are going to own it and rent it, probably to multiple people before it ever gets bought? My money would be on the shareholders. So stay savvy out there. Let's talk about how we might make some money today. And be careful out there, everybody. This is it's an interesting thing happening out there. So let's jump over, talk about ways we might make some money today. Gotta get my chart back up here on the right screen and flip this over. So before we talk about actual trades and actual ways to potentially make some money today, all trading involves a substantial risk of loss. Past performance is not necessarily indicative of future results. Just because I predicted some things, I got them right in the past, I have no crystal ball. I have a bag of unicorn dust sprinkled on the market, but, sometimes it doesn't work out. So be careful out there. This presentation is intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instrument, including stocks, options, bonds, forex, futures, cryptos, treasuries. If you desire somebody to tell you what to do based on your finances, you can hire and consult somebody, but I highly suggest you just take a personal vested interest in your own financial well-being. Nobody's watching out for number one. So be careful out there. I am a trader that makes money consistently. We look at my year-to-date performance here. Pretty nice. We look at my one-year performance. I started this account back here in April, tax time last year. Up about $62,000, almost $63,000 in that time frame. To make consistent money, started the account with roughly $75,000. I've put more money in, taken money out. It's sitting right around 120 in liquidating value. And I try to make a little bit of scratch every single day. There's yesterday's trades. If you want to see all this, it's posted and verified on K-Info right there. So how do we make some money today, you might say? Volatility was the name of the game yesterday. Look at that. Look at that. Boom, 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 right to the target zone. Man. Dive down in the little bit smaller time frame here. I outlined that we might dip right down there. That could be it. We could take this thing right back out of the top here. So that could have been it for the downside. Lower low, satisfied. Next upside target, if we're going to get above 69.50 on the cash index. Right up here, 7,022 and then 7,040. Those are the next upside levels. Right up there. Now, if this develops into something bigger on the downside, well, if we turn down off of this zone right here and come back below this low, first move down, retrace, second move down, take us on down. It looks something like this at this point. Let's just go off the ideal, and we could be cruising on down here. So here's your upside target. We get above here, coming up here, we bounce off of that, coming down here. That's the long and the short of it right there. Look at the futures, kind of the same sort of path, but be careful. We didn't make the downside on the futures like we did on the cash index. This could be indicative that the cash index is kind of fooling everybody. We made the first move down, the retrace, and we're about to do this. So we might get continuation down. So this is a level to watch on the futures. Right there where we stopped overnight. Right there, those highs at the roadmap line, the 69, 67 on the futures, ES1 exclamation point. Slightly different numbers than the cash index. Why look at the futures? Because on the cash index, we closed yesterday at 4:30 or 4 o'clock, and then today we open up, and there's a gap in price. And no matter how far down in here you go, there's no filling it in. You can turn, there's no extra innings, no extra data to turn on overnight action. But on the futures, we see the extra action here. The fact that we tested and rejected, breaking through this roadmap line. Now, if you don't have the roadmap line, click the channel homepage. Go watch the video that's pinned to the channel that plays automatically. I give you the code. I tell you how it works. But if you want more, if you want an easy button to put it on your chart, you don't want a code. You're like, code sounds crazy. Easy button's like $5. Links in the description. Click it. Get it. I give you training. I give you a watch list of stuff bouncing off of it for like 3 months for $5. If you want to add more, there's that option, but you don't have to. You could just go to the channel homepage and get it all for free. So NQ didn't even attempt to get back up here. This is a little more bearish. We're still sitting down here near the lows and might be setting up for more downside on NASDAQ. NASDAQ cash index here. First move down, the retrace, and we did tag it. I haven't got much bounce off of it, though. This could definitely develop into something deeper. 1, 2, 3 would probably be right down here. 4 and 5. Yeah, we could be near 3. We could have one more push down. This could turn down, and then we could get a strong reversal off that. So there may be a dip and rip in here today. Be careful. Because this, usually if we're doing a correction, first move down, A, the retrace, B, and then C would be made up of 5 waves. And this right now is just 1, 2, 3. 4 would probably maintain below this level right here. So this is probably your tail. If we get back above this level right there, get back above that, we're probably going higher. If we stay below it, we have the potential to make one more dip and then a potential rip. Now, the rip would be something to watch because we got to get through the 618 level wherever it is over here. So, in summary, we got to stay below that level right there. As long as we're below that level, NASDAQ is looking like we have more downside. If and when we make that more downside, got the high, got the low. Maybe that low's down here just a little bit. So this will be the zone in here, right around the 1 hour roadmap line. This zone, if we stay below it, we could take another spill down. This could be the A. bigger A, bigger B, and bigger C could take us down further. Or if we break above it, we could go on and potentially make a new all-time high that we haven't done since October. It's been October since we made a new high on NASDAQ. This thing just keeps fading off. We've been, my dad came in this morning. He's like, "Oh, I heard the market had a big sell-off yesterday." I was like, "Yeah, kind of, but really, we've just been chopping sideways since back here in October. Just been doing nothing, really. In the grand scheme of things, we've done nothing on NASDAQ since October. So put it all in perspective. Russell has a little bit different path going here. This potentially completed that head and shoulders pattern. If we can break back up through this uptrend of lows, we could set this thing up for a nice little rally here. Maybe come all the way up here, tag this 3100. It'd get pretty spicy on small caps. So that's something to keep an eye on. If we reject off of that, break down below this low from just a couple days ago, or break down, this is probably the top. And we're probably heading down at least to the daily roadmap line, if not something more sinister and more deep. Now, Russell hit the daily roadmap line here, right back here, in December. ES hadn't been there since back in May. We got close, but we didn't get there. NASDAQ hadn't been there since back in May. So Russell running a little different path. A little different path than the other two indexes. So small caps, not quite the same as everybody else. If you want to know the indexes behind those, RUT is the cash index here. And then you have IWM as like an ETF. Like you got SPY for S&P 500, you got QQQ for the NASDAQ, you've got IWM for the Russell. And I don't, I invest in REITs. I don't trade REITs, and REITs aren't the way to play that the whole monologue thing. So we were talking about stuff like Toll Brothers getting a pop. Maybe can come back up. They're set up for a rally up to 185. You got DR Horton, not quite recovering yet. You got stuff like Lennar, still way beaten down here. Had a nice pop, but hasn't been able to get out of the funk yet. You got ITB for a broader exposure. Not looking too shabby here. Still consolidating. Still has opportunity to get bigger performance. 138. You got stuff like Nail for 3x leverage. If you expect this to really get going. And maybe higher low, uptrend of lows. Could get going. It's going to take a lot to get back to the all-time high on Nail. It does have 3x leverage though. So those are ways to play. And then, other members we were talking about, like BX has so much exposure, not just to rentals, but other things. Kind of getting punished a little bit here. So, got to be careful out there. Yeah, use the Habitat for Humanity model. That's actually if you wanted to help people. Anyway. That's not what the game is. The game is to make money. Make the economy bigger. So CL, oil, got the resistance, got the supports, churning in here. I'm skeptical that we're on the breakouts. If we get back below here, probably going back, make a new low. We need a flush out. We haven't had a capitulation event. This lowest low right here just didn't feel like a final flush out. didn't have that like sparky kind of final flush out feel. But that all said, the potential that we have a bottom in place for oil, not so bad. We may see it spike right down here to this 618, break back higher than this high, then it's game on for oil coming back up to like the $100 area. Throw a wrench in all the narrative for inflation being under control. As long as oil's been grinding down, inflation's been under control. But if oil pops out of here, inflation not going to be under control. Gold, churning, 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 burning, burning, burning. Still below the resistance. Right there she is. As long as we stay under there, the potential for another leg down is elevated. I give it like 70%. 70% we do another big leg down. 30% we just pop off right now. Now, if we get up above somewhere around the 5,300 level, this tips it to 70% we're going up. And 30% we're going down. So there is a level up here that flips the odds around. As long as we're below it, odds are here. If we get above it, odds are here. That level, roughly the 5,300 level. It's right in there. So right now, be careful on gold. But if we can grind it on up in here, we can tip those odds. And that still leaves 30% chance either way that I'm just completely wrong. Bitcoin still grinding at the lows here. This dip on down to the almost to 72. That might be the bottom for now. Kind of outline this. We're just working in here trying to make the bottom. 75 was kind of the level I thought we might kind of hold, and so far we've been holding on to it pretty well. Now, it doesn't mean that we're going to. We could just continue to suck up Bitcoin for the next, I expect a bounce, but we could just do this down until October. Could just be that, and that be the way it goes. Kind of like the way oil did. So far, oil just, we did this big dip, little pop, and then just ground the oil down. That could be exactly what happens on Bitcoin through that October timeframe. Corrections are incredibly difficult to predict. I just kind of gave my educated wild guess on the path, but we're probably in a correction for the next several months. It's just the reality. So Ethereum could be on the same path. We could just grind lower, but a pop, pop for a couple months, or relief rally, if you will, would be expected, and then a final flush out. NKD actually looks like we might be popping out of here on global liquidity. So if we actually get up out of here, cruise on up to the 60,000 area, this could be indicative that we're going to see some upside boom action on risk on assets like S&P 500, NASDAQ, maybe back into gold or Bitcoin. I don't know. See. Dollar has maintained below that low, similar to what I was talking about on some other stocks there. As long as we're below that low, we still have down pressure, like NASDAQ. Just kind of talking about this. Yeah. So dollar has another chance, and that may put upward pressure on commodities such as gold, silver, oil. We'll see. Apple. Oh, beautiful. Gap right up through the resistance. Set for a 295 now. the narrative that hasn't caught up yet. These open claw bots. If you're not sure what it even is, you should Google it a little bit. It might scare you. They're autonomous AI agents. Apple is selling a crap ton of computers in the background. I ordered one, in fact, it's going to be about 2 weeks before I get it. I'm going to deploy my own autonomous AI agent to help me do stuff, provide content. That's a boom for content creators. It's a boom for coders. It's a boom for just about everybody that runs a business. These autonomous AI agents. And for the price of a computer, you can have one running. Plus the electricity it chews. Now, the base model, if you buy a mini, like a Mac mini, you've got to buy from like Anthropic or Gemini or Grok or, ChatGPT. You got to buy cloud credits from them. But if you buy like a Mac Studio and you run your own local LLM, which a lot of people with a little more cash, companies are making giant orders of Mac Studios so that they can run these autonomous agents. We're about to have a flood of this. If you're not aware of what's happening, it's about to get real and real serious. And these are going to be a big story. And they're already a big story in the background, but it's about to be a flood. This is a boom for Apple because they basically make the machine that can do all of this on one machine. Even with NVIDIA GPUs, they just don't have the memory bandwidth on the x86 platform. It just doesn't run nearly as efficient as the M3, M4, and M5 architecture that Apple's built that has the full memory bandwidth available to the system. So you can run local LLMs that don't require Google, Anthropic, OpenAI, XAI. You can run these models, open source models, on these things and run these agents. So that's the secret narrative going on in the background that hasn't hit mainstream media yet for Apple. Let's send this thing, Apple could be the sleeper AI play because of this agent thing. They could be selling millions of these computers all of a sudden, and there's no real competition in the x86 space. IBM, Dell, the architecture for x86 just doesn't support the LLM running like we see right here. You'd have to buy like a $6,000 NVIDIA GPU to plug into your x86 platform to get the same kind of performance you can get right here. So this is going on in the background. And yeah, so I can share some links. I can share some stuff with my Homeowner Trading Lab group if you want to know some more about this. I can share a video. It's pretty insane what's going on. So this is all happening really fast too. This has gone from, in January, it was just kind of like maybe happening. And then 2 weeks later, it's like, it's happening, sweetheart. So like a Mac Studio, you go look at it. The one I bought, about $3,800 for an employee, a 24/7 employee right there. I didn't have the money to buy the bigger memory. Cost upwards of $10,000 because memory is like freaking expensive right now to run even bigger models. But 3,800 is going to build me a very capable machine. And if I need to tap into the big AI models like Anthropic and Grok and Gemini and all those, I can do that. So it's pretty wild. So I'll post that for the Termite Trading Lab group. Some of the videos that I've been watching. Amazon has earnings coming up on Thursday. Google, while they can supply some LLM inference, they don't have any, their Tensor GPUs aren't, Tensor unit processors are not going to be consumer type stuff. So these AI agents are not going to be running on this. So we'll see what happens here. They can sell cloud inference, but looks like we may get a little retrace boom action here on Google before we go up to the next level up there around 385. They do have earnings coming up today after the close. Meta coming back for that test of the roadmap line, gap fill. If we can hold it, going higher. If we fold it, this is a risk. to the boom action. We may need to do another test of this area down here. So really want to see it hold right there if we're going higher on Meta. Microsoft in the zone to find support. May dip if we don't hold here. Could come on down to this 786 level, down around 385. And if we don't hold that, looks like we're going all the way back. We might take back the entire pop. Like I said, Microsoft doesn't have like nothing on the x86. You know, if you didn't know, Intel chips and AMD chips for regular Microsoft Windows type computers. x86 is the platform. That's their underlying architecture. They just aren't competing in this space. They don't have the memory bandwidth that those Apple chips have. So Microsoft not going to be selling the Windows computers for these AI agents. Could result in a return back to the lows if this narrative picks up more. NVIDIA, like I said, NVIDIA is not involved. Like there's no NVIDIA chip in the Macs. If these AI agents are actually going to supplement or replace demand for LLMs, this narrative could kick off and could be the story that gets blamed for NVIDIA retesting the breakout or going on lower. And Apple could be the big boom out of this, situation. Everybody talking about how Apple's replacing NVIDIA. Be crazy, but that narrative could come around. Tesla still hasn't touched the roadmap line. We're just churning in here, trying to build a base. We may need one quick, swift touch of the roadmap line or poke down below it before we can take off here. Netflix pushing below the supports, and this sets up what I said I kind of expected it to do. Probably going to push on down here to the 60 to 70 area on Netflix. All right, I go pull gainers, things moving up $2 more on the pre-markets, put it on the gainers list, things moving down $2 more, put it on the decliners list, hunt for some opportunities. We'll kind of spot check around here, try to find some stuff. And Lily probably going to pop up to this 1279 area. We kind of sufficiently back tested the breakouts. That would be a sufficient back test, I would think. Sets us up for a climb, 1279. This is the GLP-1 play for U.S. manufacturing. NVO, the reason that they are suffering lately is they don't have any U.S. manufacturing capacity. They're subject to the 100% drug tariffs. So automatically, their profit is dashed right here. Now, tariffs are tariffs. That's just on the raw costs. But already their raw costs, even if they import it at the raw cost, their raw cost is double. Is already 2x whatever Lilly can do. Now, Lilly has the extra costs of running U.S. facilities where these guys can run Indian facilities or whatever. But their import cost is already double the production cost of Lilly. So that's why this is a story of down and Lilly is a story of highs. Even though they've got a pill now. You can buy it at Amazon. If you didn't know, you don't have to take the jab. You can now take a pill. You can buy it at Amazon. Rolling back up in here. T-Mobile. This might be enough correction to get going again. PALL might need to visit the roadmap line before we can get going again. We did set up the breakout, doing a little retrace. It's pretty steep. That's the risky play when you play with a high-priced flyer. This, I still think this is going to be one of the biggest booms. I may pick some up here if we dip down to 135. In fact, I'm going to put an alert here. Ooh, XLK busted. Trade busted. Dang it. It's looking for XLK to get up to 150, and it busted it down to the bottom. Oh well. EMR at the target. Let's go look for decliners. What time is it? It's already after 10. We got a long list of stuff ready for entry today. App loving, continuing to get punished. Software. Oh my goodness, look at this. So like I said, the AMD narrative may, AMD, Intel, the narrative may get to be that they're not able to compete with the Apple space. Looking for this to dip into that roadmap line and make that lower low. As I've talked about, lots of people like really bummed out about this drop here today. If you've been listening to me, I've been talking about this, that AMD needs to dip back down here and make a lower low before it can go higher. I've had this target right here on the chart since back here in November. Been waiting for this. A dip below 190, maybe down to 180, would be an opportunity right here, I feel like. The bounce opportunity from this would be up here, 4, 5, 6, 700. Now, I wouldn't count these guys out. They have a chip. They actually do have a chip that does have memory bandwidth. They sell it for servers, the Threadripper. It does have the bandwidth of similar to M5, but it's just not consumer grade stuff. They have the technology. They just don't have it set up to sell tons of it like Mac Minis and Mac Studios. SanDisk keeps rocking and rolling. Probably going to get a pullback to the roadmap line at some point. MU, probably do a pullback to the roadmap line at some point. Leverage MU. Intuit, get pummeled. This may come back to the lows at 340. Software. We're at the bottom of the potential support zone. Can we hold it, or are we going to push further down? We're just seeing a lot of software get fleeced out right now. A lot of worry that maybe this software as a subscription model is just not going to keep going. TER 302 target. Watch out for the retrace. CLS roadmap line. Let's go look at the Coinbase. Probably working on a bigger, deeper retrace here. Could come down to 86 if crypto keeps sucking it up. Palantir almost to the supports. For all those naysayers, guess what? JT gonna be right again. Check on Hood. In the target zone. Look at that, baby. Oh my gosh. Can't even believe that worked. Look for a dip into the 70s. Jack's going to be back here. I do a show at 11:30 called Market Masters with Jack. We put it on the Financial Wars YouTube channel. And my man Jack Carter, when we were up here back in October, I told him, be careful. We're going to retrace, probably be down into the 70s. And he was like, I just don't see that as possible. I don't see where we're going to get a 50% retrace. And I was like, it's going to take a while. It could be out next year. And yesterday he was very complimentary that he's like, you did something that I can't do. He's like, you predicted where price is going to go. He's like, I just can't do that. And we're going to have a conversation about that today, I'm sure. Strategy down to 120. Looking for us to hold the 117 area. If it doesn't, well, next fib line down is getting to be a doozy. We're looking at like the 68 area down here. Yikes. That could be a world hurt if you're long strategy. So, STRC. Is there a stablecoin issue? Man, look at all the red candles here. I may pick some of this up if we get a dip back in the down in here. Put alert here. I may grab a few shares of that if we dip in there. Adobe, almost to the bottom. Kava. And we're seeing CMG also getting a retrace off the roadmap line a little bit. This could be complete up off the lows here. There's the low, here's the high. We could be bringing this back down in this zone before it bounces here. Now, if we push on up through, that'd be good for CMG. DocU also getting kind of punished yesterday. Big fleece out for software. Now, looking for this to hold that 1618 zone right here. Pushed on through the 1272. It's pretty rough though. So looking for that to hold here and turn back higher. I'm going to set an alert right here at 54. I want to see it come back up through there. Setups for today, CLLM. Yeah, already passed the target. This one, CRS, we talked about it. Entry, 367 targets. There's the entry today. 46, 78, 1.5. It actually runs higher than average, so 367. FDBC. Choppy. Here's the high, here's the low. Entry, 51.58 target. Stop is dollar below low around 39.90. 1376, 1.7. Just a standard ticker. Standard pattern. Standard. Here's another good one. Uptrend, pullback, continuation. Here's the high, here's the low. This is the roadmap bounce pattern I was talking about. If you don't have the roadmap line, go get it. This is the pattern. 1835. I talk about these every day that are set up for an entry today. 2875, 1.0. Not the best on the profit factor, but probably going to work out. 1835. Stop is dollar below low, down around 13. That's kind of high percent-wise for a stop, but always the stop, dollar below the low. GCBC. Not keen on the downtrend here, but here's the high, here's the low, there's the entry, and 2619 target, 1376, 1.2. These don't matter, but it is an average ticker. MPC, Marathon Petroleum. Here's the high, here's the low. Entry, target 209. NSSC. Here's the high, here's the low. Entry, 50 target, stop dollar below low. 27.96.14. This is a smoking hot one right here. Smoking hot opportunity. This one tends to hit the target. This tends to do the trend pullback continuation pattern. Trend, pullback, that's a three-wave too. Beautiful. Continuation. This would be a textbook example right here when this plays out at 50. OCFC, a little bit choppy. Did play out last time. Worked out good. 32.75, 1.2. Just an average performer right here. Another good one. Probably going to come up to the 21 target. Stop down here, 16. OLN. Here's the high. Here's the low. Entry, 25.59 targets. Not keen on the sideways. Hadn't really been trending, but it doesn't take an uptrend to get to the target. Doesn't take a new high, so might work out just fine. 40, 80, 1.7. Those are good numbers. So does trend pull back and continue. RGCO. Here's the high. Here's the low. That was the entry. Pulled back a little bit. 24 target. This has been really choppy. And it didn't trigger an entry here because it's already in the trade from back here. And it hasn't hit the target yet. So RM. Just been sideways chopping for a long time on that last one. This one didn't quite get high enough for the bigger picture entry. This small little bounce here, this price action underneath the roadmap line sets it up for this. So 41.74 would be the small picture target. Didn't trigger this algorithm. 81.4 on the numbers there, but doesn't have a statistical population, so be careful. Trust in those numbers. You can flip a coin that many times and get heads. And here's the high, here's the low. Entry here, $8. Low price stuff. That's a 20% stop. Dollar below the low, down at 4.76. 6 trades, 50. This is a kind of crummy looking opportunity on that one. This one looks a lot the same. 10 trades in the history. Doesn't mean anything. 81.9. 40 is the target. Stop is down here at 35. Not bad on that one. TRV. Last one worked out a couple months ago. Here's the high. Here's the low. 3-wave retrace. Beautiful. Uptrend. Pullback. Continuation. Would be up here at 301. 48 trades. 75% of the time. 1.4. Solid performer. Matches the performance. 75 is the average. 1.2 is the average profit factor. This is a little better than that. 1.4. So this is a solid performer right here. Nice potential trade on TRV. USCB. Next one up. This one we highlighted back several months ago. Set up another bounce. Uptrend, pullback, continuation, entry, 21 target. Stop is down here at 16. Has no statistics. So you can flip a coin 3 times and get anything. So be careful. And last but not least, WTW. Willis Towers, Wilson, Watson. This high, this low, already hit the target, so played out. You could go for the bigger bounce, but it's already played out here, so I would be careful. If you're going after the bigger bounce, here's the high, here's the low. This took way too long to set it up, but 358 would be the upside if we're going to get continuation. Buys for the day. I typically go look at bullflow.io and try to read the tea leaves of the options markets, kind of predict where we might go for the day. Yesterday, kind of took a diversion out of the... And the options are not always conclusive, although we did end up back in the box. We did not pin at the level that it looked like. The levels were really weak yesterday coming into the market. Let's see what we got today. If we can figure out where we might hang out today. Looking at bullflow.io. Links in the description if you want to get a piece of this software right here. I do get a little commish off, not very much, but they give me a couple bucks, throw a couple bucks at it. It's the cheapest software I found for these gamma levels. So look at the heat map on SPY, State Street Spider ETF here, SPY, and there is nothing. Holy bananas. This big level down here might be the path. Might be chewing on down to the 680 level. Golly, there is nothing today. Look at that. 697 upside and 680 on the downside. So 697, about where I put it. 680 on the downside, which is holy shikes. That's right in the target. So look at the levels. So this is where I kind of figure out where it might pin. The levels, put sellers start making money below 690. So, but we might dip on down, and we could rock and roll on down to 680. Man, I'm gonna go with 689. Is might be the place where we hang out today by the end of the close. So 689 right there on SPY. So even if we decouple from that, we may come back there for the close today before we do anything else. Now, this does not have to be where we end up on Friday. We could go down there, tag it, and then be off to the races. So I've seen that plenty of times on the Gamma. Now, QQQ, the one I care about more because I do the, oh, look at that. Already tagged the zone down there. We get below that, probably cruising on down here. And let's see. QQQ. Thanks for sticking around for those that stuck around. 80 or 90 of you. Wow, look at the levels on Qs. Whew, no call players. They're all up here. Big put levels at 601. But they're all out in time, it looks like. Out to the main monthly. 601. Wow. So we may 611 maybe where we hang out today, which is right where we are. 611. Pull this Gamma box over. See if we can figure out where we're going to be today on the heat map. There's probably no bubble. Like Spy not having a bubble is really weird. Yeah, there's nothing. This is scary. We could let the rope go and be down at 600 pretty easy. So I'm going to draw the box from 613 to 600. That's where I expect Q to hang out today. Could hang out at the upper end of this box, but that's it. That's the expectation for the day. Don't really see it. You know, it's going to be I think it's going to be muted if we get above 613, 614. We get back in positive gex, and I think it's going to be mute that price action. This big level down here is probably where we're heading. Probably going to chew it off down to that level at some point between now and Friday. Now I can get there tomorrow. You get there today, and then we don't have to hang out there Friday. So be careful. That can spark a bounce if we get down in that zone. That's what I see. So be careful out there. I'll be on Market Masters 11:30. I'll be back here tomorrow morning. Same bat time, same bat channel, 9:15. We'll try to dig through the markets again. Have a great day. See you.